Here at Treasury University, the Faculty of Business Administration and Management, we are ready to get information, the practical information from the practitioners in the Capital Markets Authority. What Capital Markets Authority is doing is to educate the public about the investment opportunities, the securities market, the primary and the secondary markets, how we can invest, the unity trust for both lecturers, the staff, administrative staff, and to our students. And after getting this information, we expect also our students and even the staff to go out there and you preach the gospel of investment. You know, in Uganda, the investment rate is too low. And most of us, we are not even aware that we are supposed to invest. Remember, most of us, what we are doing is working today. You consume everything that you have worked for. So it is only work consumption. And we are talking of savings. Now after savings, what next? Now the investment. So we need to take investing in the securities market. You know it is secure, risk-free. This is government. So let us listen, get this gospel, and we also take on the gospel to the public, our parents, our sisters and brothers out there. This is a great opportunity for us. And our experts, the practitioners, you are most welcome to Treasury University. We thank you for considering us, because I remember you sent an email to the Vice Chancellor of Treasury University and he forwarded it to the Dean Faculty of Business Administration and Management. My name is Dr. Mili Fakaruyiku. And today it is happening. So let us be very serious, attentive, and listen. Do not just hear, but listen, and you take the gospel. We are here with some academic staff and administrative staff. We have Mr. Rule here with us. We have Mr. Rule, you can stand up for recognition. I mean Mr. Papua. Then we have one from accounts, and they are in charge of our circle in Treasury University, the business circle. Mr. Richard, you can stand up for recognition. And we are here with the head of department, accounting and finance, the Faculty of Business Administration and Management, Dr. Narera. We have our experts from Capital Markets Authority, Mr.
Martin.
Yeah.
Okay.
So thank you.
I just want to say thank you on behalf of the Capital Markets Authority. It's a conversation that's important for us. We think it cannot be underspoken. And the question here we're trying to investigate is, what is the role of capital markets in mobilization of savings and investment? My name is Terence Tumwine. I come from the Capital Markets Authority. I'm a senior research and market development officer there. I am privileged to be here representing the authority. We just want to say a big thank you to the management and staff of Treasury University. We wrote a letter requesting for an opportunity to engage not only you, the students, but even the staff and the management of the university. Why do we have this conversation? I think it's really important that we have it now. We've just come out of COVID. We've come out of a heavy lockdown, 2 years, unprecedented, and the economy is trying to pick up. Is there an opportunity to save now? Probably. Even with inflationary pressures? Yes. I was reading a paper recently, which probably I'll share with Dr. Nalela. What is the best strategy on investing under inflationary pressures? Inflationary pressures, you have 10,000, every day that 10,000 changes value. How much you can be able to buy changes value. But is it possible to save under inflationary pressures? Probably, and maybe the conversation here. I bring you greetings from the management of the Capital Markets Authority. They express their sincere gratitude. Sincere gratitude. The CEO is really, really grateful. CEO and director and the directors there, the Capital Markets Authority, would have loved to be here and be part of this lecture. But I represent and I stand here on their behalf. The gentleman who is going to have this conversation, who is presenting on this, is a gentleman who has sat on many boards, who has been a practitioner in the capital markets over 20 years. He currently sits on boards. He's into advisory right now. He helps people structure their finances. And for now, we partner with him on engaging as many people as possible to get to know much more about the capital markets and be able to have practical experience on the capital markets experience, what happens with the capital markets, especially now for the unit trusts. Will you join with me with hands together, invite Martin Owinyi to go from
Dr. Millie, Dr. Nalera, the staff of Indeje, the students of Indeje. How is Indeje? Okay, that's great, that's great. We are very happy to be here from Capital Markets Authority, and we're very happy to be here from Capital Markets Authority, and Capital Markets Authority is sits under the Ministry of Finance, and it has several functions. Can I stand there so that? It sits under the Ministry of Finance, and it has several functions which I'm going to take you through. Martin Owinyi is my name. I am a practitioner in retirement benefits and capital markets, and we are licensed by Uganda Retirement Benefits Authority in the organization that I run as a corporate trustee, and we're also investment advisors at Capital Markets Authority. My background is in commercial banking and starting the retirement benefits industry here in Uganda. What I'm going to talk about is investing in capital markets. And when you look at capital markets actually started in Uganda in the early 1990s. When I look around the room, I wonder where some of you were at that time. But that's when it started. And what happened is, has anybody here heard of a bank called Greenland Bank? Or read about a bank called Greenland Bank? Okay? Okay, there are some people who have heard about Greenland Bank. Greenland Bank was located where Cairo Bank is located today. And where you see Cairo Bank, that was Greenland Bank Towers. Now, in the early 90s, Greenland Bank made an announcement. And what did they announce? They said, come to floor number 1, room 101, should you wish to buy Greenland Bank shares. Come and purchase a share, we'll be able to give it to you. And a number of Ugandans got excited and said, I've never owned a share. When I own a share, I own a unit of ownership in a company, and it gives me certain benefits. And these people rushed and bought shares. As soon as they had purchased shares, what happens? Greenland Bank collapses. And there was a massive outcry. That time there was no social media. We had newspapers, okay? And people began to say, Bank of Uganda, how can you allow Greenland Bank to sell shares when you knew you're their supervisor, they're about to collapse? And Bank of Uganda says we're not responsible for buying and selling of shares. There is a government body called Capital Markets Authority that has the legitimate authority to license those who can buy and those who can sell shares. At that time, Capital Markets Authority had not started its activities. But when it did, certain rules came into place. What are some of these rules? I cannot just wake up today and announce that Martin Owiny is selling shares, and if you're a member of the Ugandan public, come and buy shares of Martin Owiny. No. I need a license from Capital Markets Authority. What is that license showing? It's showing no, I'm not about to collapse. Are we together? I'm not about to do what? Collapse. Now, number two, what else does the license show? The license shows that I have the legitimacy to sell shares to the Ugandan public. Now, some of you could have heard of a company called Kilembe Investments. Those of you from Kasese, anybody who has heard about it? We went to Kasese, and what happens, we heard, hey, there's a company here, and they're exporting electricity to Congo. And in fact, when you look from Bwera, and you look at the mountains in Congo, full of electricity, and these people were pushing electricity and promising people in Kasese, we're going to give you a lot of profit, and people are buying shares. When we arrived, we said no. If you're to sell shares to the Ugandan public, you need a license from Capital Markets Authority, showing that yes, you're not taking people for a ride. You are going to actually distribute the profit that you are promising. So when you look at Capital Markets Authority, it has a number of sister regulators. Capital Markets Authority is looking after the buying and selling of shares and products around that, which I'm going to be talking about. You have the biggest of them all, Central Bank, Bank of Uganda, looking after commercial banks. And now these commercial banks are valued at about 32 billion Uganda shillings. Are we together? 32 billion. Now, these commercial banks are licensed by Bank of Uganda. Number two, you have URBRA, Uganda Retirement Benefits Regulatory Authority, supervising 18 billion. And what are they, sorry, not billion, trillion, okay? Sorry about that. It is actually 32 trillion in the commercial banking industry, 18 trillion in retirement benefits. Now, retirement benefits, what do they say? They're saying that when you are working, make sure you are putting a saving away so that when you retire, you go with some money, okay? NSSF and about 54 other retirement benefit schemes are under URBRA. Then you have about 1 trillion Uganda shillings in the Insurance Regulatory Authority. Now, the Insurance Regulatory Authority is insurance products, third party, in event that something goes wrong, do I have a fallback position? Now, when you talk about capital markets, there are a number of activities that happen. If I go to Uganda Securities Exchange, now, what did I say? When Greenland Bank was floating their shares, they invited people to their office. When Capital Markets Authority came and said, no, that is wrong, you need a license. And what is a license showing? I am going to sell my shares where? Not in my office, but at the Uganda Securities Exchange. Some people call it the Uganda stock market. What happens at the stock market? Shares are bought and shares are sold. Now, number one, when I'm buying a share, what am I looking for? Ownership in a company. That's why some people say that if I'm buying a share, I am buying a unit of capital. Why? Because to get ownership in a company, money must leave my pocket and go into that company as shareholding. Are we together? As it goes into that company as shareholding, there are two things I'm looking for. Number one, the opportunity to become a shareholder at a low price in order to sell at a high price. Same as my auntie who takes what? Tomatoes to the market. She buys at a low price to sell at a high price. Okay, so it's not rocket science. Number two, when that company is dividing its what? Profit. I want some of it. Are we together? How many of you have an MTN phone? Okay. All across the room, everybody has an MTN phone. Now, every day, you're either buying airtime, receiving mobile money, or sending mobile money. Am I right? So every day, you're actually giving MTN money. And you have to ask yourself, all this money I'm giving to MTN, what does it total at the end of the year? Are we together? What's the total at the end of the year? Why am I asking that? MTN was able to turn over 2 trillion Uganda shillings in the year 2021. How do we know that? Because they are floated on the Uganda, they sell their shares on the Uganda Securities Exchange. Now, why am I saying this? Because many of us don't know that we can become a shareholder of MTN. Why am I looking to become a shareholder of MTN? 2 reasons. Buy the share at a low price in order to sell it at a higher price. Number 2, when MTN is dividing the money, I can say that at least part of the money I gave them last year, some of it has come back to me. And what do we call that? We call that dividend. Are we together? Dividend. Now, I want to get part of the dividend. Now, if I go to the Uganda Securities Exchange and I say, I have come to buy shares, okay? And I've come to buy MTN shares. They'll tell me, thank you for coming. But we do not deal directly with the public. We are a primary market. You need to come through the secondary market. What does that mean? If you're to buy shares at the Uganda Securities Exchange, you need a license as a stockbroker. Are we together? Now that stockbroker, as you know, many of you have heard of land brokers. Am I right? People who are in between when you're buying land. They're in between the buyer and the seller. Same with the stockbroker. The stockbroker stands between the public and the market. Are we together? Now, what does that mean? I therefore take my identity card, national ID, my refugee card, are we together? My passport, you know, for those who are non-Ugandans, and I go where? To a stockbroker. And I say, please can you open an account for me? And he says, why? Because I want to buy MTN shares. Oh, very good. Can I please have your identification documents and 1 or 2 passport photographs? Okay? Now the account is open. Once the account is open, they'll tell me when you're ready. MTN is currently going at about 195 Uganda shillings. 195 Uganda shillings. Some of you think I'm saying 195,000. No, turn to your neighbor and say, he's saying 195. 195, not even 200 Uganda shillings. Are we together? What does that mean? Or if I'm to buy shares, I only need to be buying 100 shares. And 100 times 195 is equal to 19,500. Less than 20K. I can buy MTN shares. Are we together? Now, why am I buying shares? I'm buying shares in order to buy at a low price and sell at a higher price. All I need is 20K. Okay. Number 2, when MTN is dividing their profit, I want to get some of the profit. All of that happens through a stockbroker, the intermediary between the Uganda Securities Exchange and the public. Now, Uganda Securities Exchange is licensed by Capital Markets Authority. So, there are 2 different bodies. When you look at that, what is actually happening is, it is giving the public the opportunity to participate in a market that is regulated. Are we together? Now you can, when I was growing up, I grew up in Kenya. And one thing I used to do is every Saturday, I noticed either my dad, my mom would go to the market. And I would do what? I would escort them to the market. And of course, it's the traditional market, you know, open market and people are buying and selling. But one thing I always realized, every time I went, there was drama. What do I mean? Either somebody was stealing somebody's thing and another person was running after another one, all that kind of thing. Why? It was an unregulated market. But as far as Capital Markets Authority, if you try to run after somebody, at least you can run to capital markets and say, I got a problem, I need help. It's a regulated market. Now, capital markets, therefore, what happens there? Number one, remember what I told you. Money leaves your pocket and goes to the company to do what? To purchase a unit of capital. Now, another name for money is capital. Now, if money is leaving your pocket and it's going to the capital markets to buy shares in MTN, you are actually giving MTN money. They didn't have that money. You have given it to MTN. Okay? Now, if I've given MTN money, what is therefore happening at the capital markets? It's the market where companies go to raise capital. Are we together? It's the market where companies go to raise capital. How do they raise capital? They sell shares. Okay? Are shares the only thing sold at the capital markets? No. There are other products, and I'm going to take you into some of those products. But these are some of the shares that are there on the capital markets. And names that you know: MTN, Stanbic Bank, Uganda Clays, BAT, New Vision, Umeme. All of these are actually at the capital markets. Why would I want a share? Buy at a low price, sell at a high price. Number two, when you're dividing your profit, give me some of your profit. Therefore, you as a student, what is your task? Your task is to identify, if I had 20K, where would I put it? In which share would I put it? Okay? And why would I put it there? One thing with shares is the price goes up and the price goes down. It's not constant. Are we together? And what is determining that? The profitability of a company, the style of management of a company, the strength of management of a company, the response of the market to that company. Are we together? Let's look at one of them, Uganda Clays. Uganda Clays sold their shares on the stock exchange, and what actually happened is they were the first Ugandan company to sell shares. Each share was 4,000 Uganda shillings. And Uganda Clays did very good business in Kajansi. What actually happened is they were the market leaders as far as building materials are concerned. And of course, when you're the market leader, you begin to wonder, what else can I do? Are we together? Like if you're in charge of your class and you become so popular, you know, what do you begin to say? What else can I do? I mean, I need to do something else if I'm so popular. Why don't I become guild president of Indeje University? Is the guild president here? Somebody said yes, they may actually be planning to become. Main campus, okay. I thought someone was planning to become guild president. Okay. Now, what actually happens is, Uganda Clay said, how do we become more profitable? Let us go to Mbale, to a place called Kamunkoli, and open another factory. Why are we opening this factory? Because most South Sudanese, when they are entering their country, they come through Mbale and then go up towards Southern Sudan. So we will now have a chance not only to export to Western Kenya, we will also have a chance to export to Southern Sudan. And everybody was so happy. You know, Ugandans, when it comes to exports, we don't have many options. So people were applauded Uganda Clays and said, well done, go ahead and do what? Open that factory. As soon as they opened in Mbale at a place called Kamunkoli, Kenya Clays came to Western Kenya. They came to Western Kenya. The moment they arrived in Western Kenya, Uganda Clays realized we don't have an export market in Kenya. Soon after that, South Sudan went to war. And when people go to war, do they construct? They don't construct. So they lost that market. They turned to Ugandans and said, please, buy Uganda Clays. And there was an error in the machines that were in Kamunkoli. When you look at the materials, there was a black suit that was coming on materials being produced. And they said, no, this doesn't quite look like Uganda clays. Let's go to Kajansi and buy Uganda clays. If people are not buying your product, your revenue goes down, your profit goes down, the share price goes down. It dropped from, it had risen from 4,000 to 250,000. It dropped down even as low as 8,000 Uganda shillings. But fortunate for them, in that struggle, the East Africa's largest retirement benefit scheme, NSSF Uganda, came and said, we're rescuing you. Here is money, revamp your operations, and you will only pay us interest for what? 5 years. After this, this becomes our shares in the company. We will earn when you're dividing your dividends. Uganda Clays turned around, and as many of you know, quite a bit of money. I think they actually crossed 20 billion in 2021, okay? But in that whole process, the share price did what? Went down, okay? And many people actually began to say, why did I buy? Didn't I make a mistake? But when you buy a share, whether you're buying MTN, Stanbic, Uganda Clays, doesn't matter which one, you should always have an outlook of a minimum of 5 years. Why? Share prices are not guaranteed. If you're looking for a guaranteed return, a guaranteed investment, you invest in Treasury Bills and Treasury bonds, which are called risk-free government investments. What's a Treasury Bill? It's a loan to government. Okay? I can actually lend to government. And somebody says, what? Those must be very rich people if you're to lend to government. Guess what? You only need 100,000 to lend to government on a Treasury bill. Okay? Now, if I have my 100,000 and I put it in a Treasury bill, what is actually happening? I'm telling them, I'm lending you this 100,000 for 3 months, 6 months, or 12 months. At the end of that period, give it back to me with interest. Currently, what kind of interest are you going to get? 6 to 8%. If you're lucky, 9% per year. Then others would say, I don't quite like that. I think I like the Treasury bond better because the interest rates are in the range of 12 to 14%. Now what would therefore happen? I will take my 100,000 and give it to government on a Treasury bond saying, take this for 24 months, 36 months, 60 months, 15 years, 20 years. Are we together? But keep paying me an interest. Are we together? Now, as I look at that, many of us are saying, hey, you said how many months? 24. Those are just too many. You know, I could have used that 100K a lot better. Are we together? Now, at the end of the day, you're talking of 100K. The staff circle is probably talking of a larger number. Do you have the student circles here? You have a student circle? You do. Do people pay back? Okay. So if even the student circle would talk of a different number. I see some guys laughing behind. Maybe they haven't yet paid. Yeah. So what happens here? When I say I'm looking for the Treasury bill or the Treasury bond, capital markets comes and tells you, if you're not looking to invest for such long periods, we have a solution for you. And what have we done? We have licensed people called fund managers. And the fund manager stands up and says, I'm the expert. I tell you about the Treasury bill, it comes to the market every 2 weeks. And you know what your next question will be? Which week are we in? Is it about to come? Has it just passed? Or was it yesterday? Are we together? Now, what's happening there? You're not the expert. You don't quite know. Number two, what's the rate? Is it worth it giving 100,000 there? And for how long should I give it? For 3 months or for 30 months? I don't quite know. Can you advise me? The fund manager says, yes, I can actually advise you. I have the solution. What did I do? I have bought the best Treasury bills and bonds. If the price in Uganda is not good, I go to Kenya, I go to Rwanda, I go to Tanzania, I buy the best. And what do? I put them in a pool of investments. Okay? Now, that is what they call the collective investment scheme. I collect my investments, my treasury bills and bonds into one pool. Are we together? Now, as I've collected them in the pool, I then announce I have a very attractive pool that outcompetes all my competitors. Come and buy from my pool. Don't even go to Bank of Uganda. Buy from my pool. I am licensed by Capital Markets Authority. Now, how do you buy from the pool? You buy from the pool because this person will say, out of all these investments, I have broken them into units. Why? Because I know that if I'm to ask people to bring $1 billion, not many people have ever seen 1 billion, leave alone 1 million. Are we together? So, what do they say? We have broken the investments into units, divided this whole pool of 500 billion into 100,000 units. Are we together? These 100,000 units are yielding an interest on a daily basis. Why? Because under here, we have been able to buy treasury bills and treasury bonds. And every day, people are coming in to buy the bonds and others are selling to say that, me, I'm done with my unit, I'm happy with the interest you've given me, take your unit, give me my money. Others are saying, here's my money, give me the unit that the other one has brought. Every day, there's actually interest coming into your account. And that's what they call interest upon interest. There's a name we have for that. What is interest upon interest? Interest upon interest. Did I hear somebody say board maths? It's compounded interest. Okay? Tell your neighbor compounded interest. Okay? You compound your interest. Interest upon interest. Now, as I compound my interest, what am I monitoring? Every day I am earning a interest, a return. Now, as I earn my return, I have the opportunity to say, I'm happy now. The return you've given me on my 100,000 is excellent. I now want to give you back your unit. Please give me my money. Within 48 hours, you have your money. What is the difference? The difference is as follows. If I had 10 million and Dr. Millie had 100 million and we walked into the bank and we both say, Dr. Millie says, here, bank, take my 100 million. Martin Owinyo also says, here is my 10 million. Please give us an interest rate. Who gets the better interest rate? Those of you who want to become bankers. The 10 million, 100 million gets a better interest. In the unit trust, we are all equal. Everybody gets the same interest. Number two, the bank is going to say, okay, Dr. Millie, how long do you want to put away this money? Dr. Millie will say 2 months. And Martin will also say 2 months. And what will happen at the end of the day? We will not be able to touch that money even if we say, hey, it seems I need some of it. Not all, but some. I'll not be able to touch it. Why? Because the bank will tell me, if you take this money, you forfeit your interest. And we only pay interest at the end of the month. So, even if you're taking it at in the middle of the month, we haven't yet paid interest. You can go with it. But we're not paying you the interest. We are keeping it for our profitability. Now, with the unit trust, all I need to do is send an email. Okay? I've also given them my ID. I've given them my national ID. I've given them some passports. I've given them my bank account. And the money has moved from my bank account to the unit trust account. And I say, out of the 100,000, send me 50,000. Within 48 hours, it will come onto my bank account. Now here, at the end of the day, Dr. Millie is still waiting. 2 months, I can't touch my 100 million. The unit trust is a flexible product. Are we together? It's a flexible product. When I need my money, I get it in whole or in part, and they will not tell me that, oh, we are paying at the end of the month. every day I will be getting my interest. So I came with my colleague Terrace, he's at the back. I would just like Terrace, if you could just stand up and tell us the pros and cons of a unit trust. Is it always attractive, a collective investment scheme?
Thank you so much, Martin. It's interesting to ask what are the pros and cons. You highlighted many of the pros. Right? It's flexible. You can't be able to receive your resources as and when, or even receive part of your resources. Two, the ease with which you can open the account is actually very, very simple. Just an ID and a few passport photos, and then you can be able to open it. The return, he has already talked about it, is a daily return. Well, it's annualized, but then it's a daily return that you shall be able to. It's computerized, so that you can receive it per day. It fluctuates as and when the fund is able to generate return that's good. If it's bad, still it will give it to you. Average can be between, others are talking about 11%, others give about 10%, but it's dependent on market rates, as Martin has said, of what the pool has invested in. Has it invested in equities in Uganda? Has it invested in equities across the border? Has it invested in fixed income, i.e. the bonds and treasury bills that Martin has talked about, to be able to talk about the in return. Going to the points is you do not have, or rather the disadvantages, is you do not have access to these funds now. You have literally given them to a fund manager, an experienced fund manager, a licensed fund manager to help you raise return. So you may not be able to access them as and when. So that's a bit of the disadvantages you have. There's a bit of fees that are very, very, very minimal fees that you can be able to, that you are charged to be able to manage these funds. I thank you much. Back to you.
Thank you very much. Now, evidently, because you will not find many places where you're paid interest daily, this product is becoming attractive in Uganda. Current interest per annum is not a get-rich-quick scheme. Is in the range of 10 to 11%. Are we together? Every day, and that is per annum, not per month, okay? Some of us go to money lenders and we are so used to per month. Give me my 10% per month. No, this is per annum. It's not get rich quick. But because of that popularity and that flexibility, we have seen an increase in the what? Allocation towards unit trust. Terrace, have we already crossed the 1 trillion mark?
As at December 2021, we were about 900. We were estimated about being about 998 billion. I don't know whether we have crossed, but I also think that we have crossed.
Excellent. So why am I saying that? Ugandans have now allocated close to 1 trillion towards the unit trust in an economy of 100 and yes sir.
I have a simple question here. My name is Nasima, and I am a staff with the university. I have a simple question. Does this arrangement process to service company? And if it process there, so what is the access of benefits to service companies?
Okay, did you get the question, Terrace?
Does this arrangement, this arrangement, process to service companies?
Service companies.
Yes, and then if it's process that we have that, they diversify to those companies, then what are the chances of benefiting from that technology?
Okay, yes. This, are you asking, does it cross to also to enable companies to benefit from it? Yes. Actually, as long as you're a legal entity, and you have your certificate of incorporation, your trading license, you're good to go. Yeah. So whether you're a SACCO, whether you're a company, whether you're in tours and travel, whether you're in Deja University, all you need to do is go to a service provider. And some of these service providers include UAP Financial Services, ICA, Insurance Company, Zeno. There's a host of them that are involved in the trading of unit trusts. They have an attractive pool, which they've broken into units, okay? First of all, that pool is called a collective investment scheme. So they've collected their investments into a pool, divided them into units and sold them and said, if you're a company, if you're a university, if you're a SACCO, if you're a student, if you're a staff and you have 100,000, come and buy a unit. Now when we say 100,000, we're trying to say that's the minimum, not the maximum, okay? Because some of these unit trusts have over 500 billion in them. So the sky is the limit. All I'm looking for, pay me a daily interest, ensure that that interest is not taxed, okay? So the interest is actually not taxed. Terrace, I would like you to say something about that, because when you talk about not being taxed, some people may not believe me.
It's been a very interesting discussion about whether to tax this. So they are investing in equities, they are investing in bonds, and most of them are actually already taxed. So now the question is, do they tax the small savings that you have already earned? It's a very big question. Until now, they're not being taxed. They are what you receive. If you're given 10%, you earn a net of 10%. Literally, it's what comes to your house. And if you add, in simple terms, if you put 1 million there today, after a year, you guarantee, if the market rate stays at 10%, you guarantee that you're going to earn an extra 100,000. But there's also a possibility that the rates will still go up, because the refund may actually earn much more. But we've not seen, it's been if it goes down, it will be a very, very slow reduction, because the fund has already invested in the pool of investments. So it will be a gradual, maybe of a period of time, but you won't see immediately. But at least you're sure that it will increase in the long run.
Thank you. So we are not going to confuse you by telling you about the different kinds of unit trusts that are there, but suffice it to say, some unit trusts can be risky and some can be safe. Dr. Mili will tell you, when you invest in a government security, it's called a risk-free investment. So why are we focused on the risk-free investment? To give you the opportunity to say, if I'm looking for a unit trust, and you're going to ICA, you're going to UAP, you're going to Britam Asset Managers, you're going to Zeno, you walk in and say, please give me the risk-free unit trust, the one that has invested in government securities. Others will go in and say, give me the risky one. Why? It has shares in it, and share prices go up and share prices go down. Okay? Your capital is not guaranteed. But if you're going into one that has invested in treasury bills and treasury bonds as most of their assets, you're on the safer side than if you go into one that invests in shares. So when I look at one that invests in shares, that is called an aggressive investment. When I look at one that is invested in treasury bills and bonds, that is called a conservative investment. Okay? How many of us here are aggressive investors? We want the risky investments. Please put up your hand. You want the risky ones. Conservative. I see a hand about to go up there. Someone is saying, I'm going to tell you. How many of us are conservative? We prefer the safe investments. Okay? Excellent, excellent. That shows me at least you've understood what we're talking about. So, at the end of the day, as I said, you just send an email and say, thank you for the unit you gave me when I brought my national ID here and told you where I bank. So you don't even need to change the SACCO people. You don't have to change where your bank is. Your bank stays. That's the operational account. The unit trust account becomes the investment account. Anytime I need money from the investment account, within 48 hours, I send an email and it is shifted from the investment account to the operational account. Have I lost you? Or it's still clear? Excellent. So that's how I'm able to get my money. Thank you. I've talked of two things. You notice I first started with shares. Shares are different from collective investment scheme unit trust. Shares, that's buying and selling of ownership in companies, to buy at a low price, to sell at a high price, and give me part of your profit, MTN. When you are dividing, I'm there, give me some. Okay? That's a shareholder. That's different from a unit trust holder where I am looking to earn an interest. Terrace, please come and give some closing remarks, and then we open up for questions.
Dr. Martin. I want to think knowledge has been shared, and there's something that has been learned from all of us. Just like Martin says, these are different investment opportunities that you have before you. Shares and collective investment schemes or unit trusts. Just like Martin is sharing right now, I like to tell this story because it's so real, and I wish I had started then. 20 years ago, I probably was seated somewhere there in a school or campus that Capital Markets Authority organized. It was the first time I had this discussion on shares. At the time, there were no collective investment schemes. And I just wish I had invested then. Is it possible that my portfolio would be bigger now? I want to think so. So we have the opportunity now. We are not very young and we're not very old. There's still time ahead of us. We can start now. We can start now to be able to invest in these opportunities and products. I thank you so much, Martin. He has been as elaborate as possible. I want to think that there are questions because there's a lot to learn. He just asked, can companies be able to invest? Actually, he went on and asked which companies are available to invest in. Where do we start now that we've gained the knowledge? The number of companies, he hinted on them that are licensed by the Capital Markets Authority. I don't know, you want to answer that question?
No, you go ahead.
Okay. Yeah. So the number of companies that we license by the Capital Markets Authority, you present your papers, you present your ability to manage a fund. There's a whole process through which we get to ensure that your savings are safe, your investments are safe. We ensure that there's different processes and Chinese walls to ensure that these companies are doing the right, investing in the right products and also keeping your investment safe. So right now, there's UAP investment financial services, there's Zeno, there's SBGs into shares, and they are thinking of investing in opening up a branch in collective investment schemes. There's ICA. Is there any that I've forgotten? Britam Investments. So right now, you have all these opportunities. They usually come with us, but they are caught up with the rain. One of them just called me saying, we really want to come, and then at least help open some accounts for those who may be available. But they really, really are interested in helping and sharing some knowledge. But I want to, unless there's something else to add, but I want to open this up to questions. Any questions, anything that you think that we needed to clarify on? Your name and probably your course and your year.
Second semester. My question is, how do I find the license program and how much do they charge for that account?
Yes. Any other questions? I think we'll take more.
Joseph Derry, third-year procurement student. Now, I have a few questions. The first one, what are the risks, especially in times of depression, serious inflation? The current value of 100,000 items. Then you say the ones of the government have less risk with the investment. But is there a certain moment whereby can you also advise us on how long person should go into or should be in that partnership with the company? How long can it be? Maybe like 5 years? Because a person can have that money like in a year he need back the interest for 1 year.
Thank you. Let me start with Bukenya. Yes, so Bukenya is asking, where do I find a stockbroker? Number one, you first have to appreciate which stockbroker are you looking for. Okay? And I don't think that's very complicated. Do I want shares or do I want a unit trust? Which one do I want? So in my mind, I must have decided, am I going for MTN Uganda or am I going for unit trusts? Now, MTN Uganda, as you saw, started their shares at 200 per share. Now, when you look, it's at about 195, and it had gone as low as 180. That doesn't mean that MTN has a problem. It's just the shares market, okay? Some people may feel that your share is less valuable than you think it is, or more valuable than you think it is. Am I making sense? So share prices go up and they go down. And you're going to see MTN's share price coming and crossing the 200 and continuing to go up. Now that process of going up, it is not something that you can force. It takes its time. And the market responds at will. Are we together? Therefore, many of us would be saying, when is it going to be 250? Nobody can tell you. Only God. Are we together? Because no matter how much these people do, it's going to depend on how the market responds. On the other hand, on the unit trust side, remember they have bought Treasury Bills and Treasury bonds, which are giving an interest. That's why when it says that, when Terra says that the interest is in the range of 10% and it's not likely to change in a hurry, you can go to the bank on that and say, I'm looking for that 10%. Am I making sense? So those of us who are saying, I want the 10%, those go for unit trusts. Those who are saying, I want the 250 and I'm ready to wait. Are we together? Doesn't matter how long it takes, I will wait. And why am I waiting? Because the argument is that when I buy a share, it takes its time, but as it takes its time, over a period of time, it actually does better than the 10%. Am I making sense? That's why they say, talk about shares and talk about unit trusts. Now, when I talk of unit trusts, this one is for the guys who are saying, those time things, you first wait with them. Me, I want my money now. I'm a Ugandan. Give it to me now, okay? I'm a Kenyan. I don't like this thing of waiting, okay? Now, the guys who are waiting are saying, me, I have a long-term plan. If MTN is likely to do better than this over 10 to 15 years, I'm not in a hurry to get my money. I have residue income, okay? And I want to earn passive income over 10 to 15 years and get back my money when I'm ready to get it. For now, I don't need it, and I'm confident I'm not going to need it for the next 10 to 15 years. Those are the shares people who buy MTN. Yeah. So where do I find the people who are selling MTN? they're actually usually the same as the guys who are selling unit trusts. I just have to be clear in my mind, do I want shares or do I want unit trusts? So, as far as UAP is concerned, Nakao Business Park, there's a UAP Business Park next to MOOBS. I just walk in there, go to Block A and say I've come to UAP Financial Services, give me unit trusts, okay? Britam is located at Akibwa Road, opposite Emin Pasha, okay? Zeno is at Workers' House. ICA is all over the place. Crescent Towers, Renzori Courts, and Sanlam is located in Bogolobi. I can walk in and say, I'm looking for shares. Another one will come and say, I'm looking for unit trusts. But what am I saying? Understand which one do you want, the shares or the unit trust. Then, the question that came, do you want to handle his? Yeah.
Ultimately, just to add on, is how long, he asked the question of how long and versus what the risks. Yeah. It's important that one thing we take away is investment is risky. Just like standing here is actually risky. I don't know whether I'll fall. I don't know whether when I sit on this chair, it's firm enough. When I was coming, I was just thinking, because there's a truck that came very fast, and I imagined, what if that truck actually hit me and I died immediately? It's life is a risk. I don't know whether there's anything safe. But what I'm trying to say is, just like life, investment is a risk. You just hope that you're going to get a return. When you're giving it to that, or when you're buying land, for example, which is what many people do, you just hope that it's going to go up. When you're doing whatever you're doing, you just hope that it's going to go up. So there's a risk. But what we are saying here is, what is for sure, you will get a return. You will get a return, and the benefits over and above that is, for the unit trust, is you can have access to the money immediately. I know people who, they left their money there. Any money they get, they put there, they keep aside. They keep aside literally. And recently, they needed to use it for investing in some other thing. So they got it out and literally invested in it. They could replenish. You literally apply, send an email. You don't have to go to the offices, to the physical offices. No, you literally send an email. In writing, you say, this is what I want, and this is how much I want. And you don't have to withdraw everything. And you have this, you have your return that you've earned over time. Those are the benefits. How long is the question? He hinted on it, but every one of us has a different goal. We all came to school for different purposes. And I don't know where your purpose is. Probably you want to start a procurement firm. Someone else may want to be employed in an organization. Someone may want to start a business. They just want to have a bachelor's degree and start a business. So what is your goal? What is your future? What do you hope to do? Do you think you need cash immediately? Do you think you need to put aside money for the long term? Because possibly, if you have the money nearby, you may spend it on a phone. You may spend it on a car. You may spend it on Tusimbude, which is KFC. You may spend it on something. So you want to put the money aside diligently over time. So ultimately, like he said, you really have to make, in the financial, you learn finance. So the personal financial plan, an investment goal, your personal investment decisions, what influences your investment decisions. And therefore, you can be able to choose between a unit trust, shares. I hope I've answered the question a bit.
To add on to that, I'm also inquiring, because It's about buying shares. The person who has bought shares and the one who owns shares. So I'm advising that. Then I'm under current. So I would like to know, can a company now try to deal with a company and still there to
I want to take you to a slide. Just give me a moment. Okay, so you remember this slide where he talked about the securities exchange? That's the secondary market. Now the company, if I get your question straight, can a company deal with another company in terms of
buying shares?
Okay, let me hope I understand. Can Martin Owini Incorporated trade with Terence Tumwin Incorporated and exchange shares?
Or want to buy from another, or want to sell?
That's interesting. That's a very good question.
Remember, he's a procurement student.
He's a procurement student. He's a procurement student. If I hear your question straight, can the company, Martin, sell his shares to Terence as a company? Part of the share holding. And that's where, in the beginning, he talked of Greenland Bank, which is primarily, among other reasons, why later, a few years later, the Capital Markets Authority was started in 1996. Ultimately, why the Capital Markets Authority was started is to protect investors, to approve of prospectuses. What is a prospectus? It's that document that a company presents to the authority and later to the public about these, about the shares that they are selling and the vision of the company. It's a document, like a pamphlet. Just raise up that book. A little thicker than that, but it talks about the vision of the company. It talks about what the company is going to do in the next 5-10 years. What are the risks that it sees as an industry? Where can it grow? And that's the prospectus. So the CMA approves of those prospectuses before they come to the public, and then they actually raise capital. So back to his question. Can a company sell shares to another company? As the CMA, we think it is wise for the company that is selling shares to come to us. Unless it is privately owned. Because if you choose to go public, then you have to engage us. And there's a minimum number of investors that you have to look for. There's a minimum size also. There's a bit of requirements that you're supposed to meet before you actually go public by the Securities Exchange. For example, they say you're supposed to be able to meet the IFRS, the international accounting standards, or you're supposed to be able to be profitable for about 5 years. There's supposed to be a governance structure. All those things have to be in place before you actually go to the public. Does that make sense? There are incidences where a company is actually looking to raise capital. Company X, my company, right now I may be dealing in, say, bricklaying. I'm just giving an example. Bricklaying. And I really see that I have a number of customers lined up and there's all these business prospects, but I need capital. I need to be able to set up other bricklaying facilities. And where can I go? I now engage Martin, who might be a private equity firm. This is another engagement. Who has heard of a private equity firm? I think let's start here. Private equity?
Private shares, just a couple of shares.
Shares.
Yeah.
Shares. So private
Private
equity
company, Kubo or something.
could be someone, he is a business that literally deals in investing in businesses. Private equity, in summary. It is a business that deals in...
His question is. That's what his question is.
It's possible, that could have been his question.
Yeah.
But private equity is a business that deals in investing in other businesses. I could invest in Dr. Millie's business, I could invest in Dr. Nala's business, I could invest in his business as well. But that's his primary role. He keeps looking out for businesses that are performing well. So I could approach Martin and tell him, this is my business prospect, this is what I want to do, this is where I look to grow as a bricklaying company. And then Martin gives me some money in exchange for shares. It could be in exchange for debt, a short-term debt. And that's something also the Capital Markets Authority is looking into, because we've seen companies actually raise capital through these means. They've grown through these means, but there must be a relationship. And Martin has to be registered as a PE firm, private equity firm that actually invests in shares. And then by the time I come to him, my investment is actually going to an established company. And we are considering regulating those. That's a discussion that's ongoing in the ways that we can be able to engage them, the private equity firms that can be able to invest in other businesses. Because if they're not going to sell shares publicly, they could be able to sell shares privately. If that makes sense. Are we together? They could be able to sell shares. It could be on a short-term basis. It could be on a long-term basis. That depends on the relationship with the firm. I want to just...
Thank you for the opportunity. I asked 2 questions, but you answered one. The question left out was about how much do I need? I'm forgetting that number.
How much do you need? Okay, we're going to answer that. Any other question? Yes?
My name is Antonio.
Could you be a bit...
My name is Antonio. I'm asking only 2 questions. One is, how do I move from one stock broker to another? The other question is that, in case I have shares, like I've bought shares, can I be able to go, like I've got like 500, I'm buying shares in maybe Equities, and then maybe I get some other money and still I want to make some amendments. How do I do that? Is it allowed, or I just have to stick on the shares which I've bought and I wait for them to expire?
Thank you, Doreen. One more question and then we'll...
Apajok Susanna, my name's student of procurement, 3rd year, 2nd semester. My question is, if I'm an individual, I'm not an organization, but I would like to get shares maybe from Omeme or Standing Bank. What are the conditions for me to get the shares? Because for a registered company, you're supposed to have a trading license, you're supposed to have a certificate of incorporation. Hope I'm right. For an individual.
Okay, thank you. Tell your friend 100 years. Sorry, 100 shares. I was checking if you're awake. That's why I said yes. Okay, tell your friend 100 shares. Okay, what are we trying to say? That's the minimum shares that you need to buy. And it varies from company to company. That's why I gave you the MTN example. Remember when I said, what is 195 times 100? 19,500. Round it off to 20K, you can buy shares. Okay? What's the minimum for unit trusts? 100,000. What's the minimum for Treasury Bills? 100,000. When I'm going to buy, What do I need? My national ID, my refugee card, my passport, okay? I just need to be able to identify myself. Once I've identified myself, a few passport photos, they will open an account for me, okay? And the names will be Martin Owens Collective Investment Scheme account, okay? Or, which is the other one? The CIS. Okay, then there's the one for shares is called what?
CSD.
CSD. Yes. Which stands for Central Security Depository. If I'm buying shares, I have opened an account at the Central Security Depository account. Okay, there's a registry where that is held. And what actually happens, I can then put my money into that account, and that's where the record of my shares is going to be. Same thing, national ID. The issue here in terms of risks is share prices go up and they go down. Unit trust, I get a return. But in a high inflation environment, I may be in a situation where inflation has gone up. I'm losing value. What do I do at that point? I say, take your units, give me my money, because I'm now taking my Uganda shillings to put them either into Kenya shillings or into US dollars to cushion against inflation. Okay, and within 48 hours, I will have my money. Can I move from stockbroker to stockbroker? There's actually no reason to do that, because remember, I now have a Central Security Depository account. And guess what? Have you ever seen a stockbroker in your life? Never. There's one right here. Okay? And she's going to tell us what she does if I want to buy a share or I want to buy a unit trust. Hear it from her, because maybe you didn't believe us. Welcome. Jovian. Introduce yourself and...
Thank you, Martin. Actually, I do help individual students like you, companies, investment clubs, institutions to invest and make money by investing in products such as equities, which are shares, and then unit trust very soon, and then treasury bills and treasury bonds. I'm boss at Jovia. I work with SBG Securities, which is a sister company of Stanbic Bank. We sit at Crested Towers, ground floor. So our work basically is to help you make money, because we know you're busy, you're students, most of you. So you don't have time to run up business or start up business. So our work is to help you invest the money so that your money may make money for you while you're here studying. You don't need to look for a building where you pay rent, electricity, workers. No, we want you to concentrate on your books for now. Just give us your money so that we make your money make money for you. I think Martin had already explained how to...
Yes, let's take them through the process. We have 20K, 100K, what do you do?
Okay, so the minimum number of shares to start investing with is only 100 shares. So you may ask me, how much is that? How much money do I need? It depends on which company you're investing from. We have 9 listed companies right now locally. Among those, we have 3 banks. We have Stanbic. Stanbic right now is trading at 25 shillings. So how much do you need? You only need 2,500 to own Stanbic Bank, with only as little as 2,500. Yes. NIC is trading at 5 shillings. So to buy NIC 100 shares, how much do you need? 5,000. I believe most of us have 5,000 here. Umeme is trading at 240. So you need 24,000 to own 100 shares. So do not give excuses that for me I don't have money. We believe as long as you can have 10,000 with you, you can become an investor. So giving an excuse that we don't have money, we believe you all have access to 10,000. So you can own even more than, with 10,000 you can own more than 3 companies. The minimum is only 100. And this is the beauty, you need to open up a shares account. These accounts never go dormant, whether you bought shares or not. So I believe today, at the end of this, we are all going to open up accounts. These accounts are free of charge. We only need your photo and a copy of your ID. And We have the forms with us here. If you don't want to fill in a physical form, you can go on the USE website and use the Easy Portal. You can take a selfie if you don't have a photo. So you just take a selfie. We'll take you through how to open up those accounts. They are free. You don't need any money. Then you can start investing. The minimum is only 100 shares for each company. Yeah.
I hope we've answered all the questions. And also just to add, I think it was Doreen's question. You can invest in, like she said, in 3 companies. You don't have to invest in only one and wait for it, or invest once and then just wait. You can actually invest, and then when you get more resources, you can still come back to her or all the other players that you choose. And then you can say, I want to top up and invest more because I believe in the vision of Martin Owini's company or Teresa's company, because I have seen them. I buy data from them, or I bank with them, Stanbic Bank or DFCU, or I buy, I think they do very good clay in terms of brick, and I think they are a mini monopoly, you could say. I mean, these are different perceptions you can choose, and then keep investing in this. Any 10K you get, I want to buy. You have a mobile money platform where you can be able to,
Yes.
for ease of purchase.
Yes.
So there's no excuse whatsoever, really. You don't have to go to the offices. There's an email you can write. There's an online portal that really, I think things are now much easier now. There's a question at the back there. If you don't mind raising your voice, your hand, and are there any other questions? When do you get your profits after investing in shares?
Good question.
Very good question.
Very good question.
Let's take one more and then we answer them together. Is that a question? Yes. Stand up, your name, and I'm sorry, can you turn louder? Yes, sir.
My question is, can I
When can I move out after investing, right? Okay. Over to you.
Thank you so much for those beautiful questions. And number one, there's a lady who asked, can you have both unit trust and then shares? Yes, you can. Because remember, with you can have unit trust if you want to do short term. Because remember, with unit trust, especially if you do the money markets, the shortest period is only a month. After a month, you can redeem and get your money out. Yeah? But if you want long term, with equities, we tell you go in long term. Because you may come short term and then the price, remember with equities, prices go up and down. So if you come in short term, you may be burnt or you may sell at a loss, which we do not want. Because we want, when you come to invest, we want you to make a return. Yeah? So those who want to do short term, we tell you go in for unit trust. And those who want to do long term, come in for what? For equities. But since you're still students, we tell you can do both. If you have 100,000, go in for unit trust. And then if you have less than that, you can come for equities. Yeah? Yeah, so you can do both. Then someone says, if you want to how long does it take you to get a return in equities? Now, when it comes to capital gains, we can't tell you in such a period the price is going to go up. Look at it like people who do forex trading. You don't know what the rate will be tomorrow. The same thing with capital gains. Yeah? The price can go up tomorrow or it can drop. Yeah? So with capital gains, you need to know what price did you buy at. You might stay in for, let me say, a month, 2 months, or even 3 months when the price hasn't changed. So with capital gains, we can't tell you on such a day, you can pull out the price will be this, because it depends on the forces of demand and supply in the market. Yeah? Now, when it comes to dividends, we can tell How do we tell? Companies at the end of the financial year, they do announce their financials. And in case they've posted a profit, they'll declare that we will be paying this much to the shareholders.
That's the question she asked.
That we will be paying this much to the shareholders. Now, some of the companies have already started publishing their financials. Meme published, and they say they're going to be paying a final dividend of 54.1 shillings per share. So you know how much you're going to earn and when, because they'll set out a date when that money will be paid. Uganda Clays is going to be paying 1.3 shillings per share. Yeah? So when you look at those companies, with dividends you can tell, because companies announce and they set that date when they're going to be paying. So you can tell. With capital gains you can't, because you don't know what the price will be. Yeah? Capital gains, it depends on the forces of demand and supply.
What is the capital gain?
Yeah, that's a very good question. What is a capital gain? A capital gain, this is one of the ways how you can benefit in shares. You buy the shares when the price is low, then when the price appreciates, you sell your shares. Let me give an example. Like a month ago, Umeme was trading at 180 shillings. But right now, as we speak, the price is 240. So whoever bought the shares at 180 and they are comfortable with the increment they've made, they can sell. That's what we call a capital gain. A capital gain is the difference of the price you bought at and the price you'll be selling at. You buy at 180. Right now, the price is 240. If you're comfortable with the increment, you sell. Let me give another good example of UCL. There was a time when UCL, like 2 months or 3 months ago, Uganda Clays was at 5 shillings, 6 shillings. But right now, as we speak, Uganda Clays is at 22. So whoever bought Uganda Clays at 6 shillings, right now, they've made more than, how much? 70%? So you buy at 6. Right now, the price is 22. That's what we call a capital gain. You buy at a lower price. When the price increases, you sell your shares. And that's where, if you want to invest in equities, you should be looking out for capital gains, because that's where you earn more. Yeah.
Guys, I want to ask you a question. Did I lie to you? Have you heard it from her?
Yeah.
I think she's put it so well. Can we give her a big round of applause?
I think there's just one more question. When do you exit? He asked if I want to exit. What happens?
Okay, so if you want to exit, like I said, if you're comfortable with the increment you've made, you can exit anytime. Anytime, because trading takes place Monday to Friday from 9 to 1. So let me say you bought today. Today is when? Tuesday. Monday. Sorry, I'm thinking ahead, sorry. So today is Monday, and then your shares will settle in 3 days. On Wednesday, you can sell your shares if there's an increment. So when it comes to equities, you can exit after 3 trading days, because that's when the shares settle. So you can exit on Wednesday, you can sell and exit the market in case the price has gone up. However, even though it has dropped, you can sell, but we don't encourage that, because you'll be making a loss, and we don't want that. We want you, by the time you invest, we want you to make money, not to exit when you've made a loss. Yeah, so you can exit in equities after 3 days. When it comes to unit trust, the shortest period is a month. Yeah, thank you.
Another hand of applause. Any other questions? They're very good questions, I think. Okay. I think from us is just to say thank you. A really, really big thank you. It's been a very engaging session. Just a hand clap to all of us. It's been a very, very engaging session, very beautiful questions. I just pray that we have learned 1 or 2 things. I just pray that we've left this place at least gained a little more knowledge from this engagement. We hope we can have a little more. We'll keep in touch with the dean and the head of department. We've had who have really been helpful in organizing this. Just a hand clap for. So we thank you. We look forward forward to more engagement, and a big thank you from the management and staff of the Capital Markets Authority. Thank you. Over to you.
Yeah. Thank you, the Capital Markets Authority. We've gained a lot. You know, you did this in your financial management, the financial institutions management, those who are doing accounting and finance. So now practically you've heard this. And this kind of engagement is what we need. So we really thank you so much.
She's actually here to help for anybody who has more questions.
Yeah, in fact, she's here. You can keep engaging now. This is time for opening up accounts because we shouldn't leave it just in words, okay? We need now to implement. It is time for us to invest. So do not leave now, these experts to leave you without investing. You've heard, you can write from how much? 5,000. And she's saying that you don't even need money. You open up an account. Okay? You can open an account online or you can fill in a hard copy. Yeah, in a hard copy. But I know most of our students are smart now. Yes, most of our students are smart. So, please, this is the time for us to implement what we've heard from government, from all the stakeholders. Thank you, media, thank you, head of department, and thank you, students, because we have here right from year 1 to year 3, and I know they are going to spread the gospel. Thank you so much for coming.